Exam Scholar, Real Estate Edition.
Question 1. If a person has no cash on hand but offers a personal note payable in 60 days as a deposit on real property, this would be A. An unacceptable form of payment. B. Acceptable if the seller is informed beforehand by the agent. C. Void. D. Both A and C. Answer. B. The personal note is an acceptable form as a deposit, but the seller must be advised of this before the agent can accept it. Question 2. A mortgage company that originates loans that are then placed with lending institutions of whom the company has a pre-existing relationship is best known as A. Corrupt. B. A mortgage broker. C. An intermediary. D. A distributor. Answer. B. The best definition of a mortgage broker is a mortgage company that originates loans that are then placed with lending institutions. Most commonly, the lending institutions and the mortgage company have a pre-existing relationship. Question 3. The difference between the interest rate and the index on an adjustable rate mortgage is best known as A. Margin. B. Differential. C. Substitution rate. D. None of these. Answer. A. A margin is the difference between the index and the interest rate on an adjustable rate mortgage which remains stable over the life of the loan. Question 4. If an individual is representing a firm that makes loans on real property, they would be known as A. A lender. B. A broker. C. An intermediary. D. An attorney in practice. Answer. A. An individual can represent an institution that makes loans on real property, and both the individual and the institution can be called a lender. Question 5. A firm that makes loans on real property based on an individual's creditworthiness is known as A. A creditor. B. A lender. C. A loaner. D. A lendee. Answer. B. In real estate, the firm or institution that makes loans on real property is called a lender. The lender makes loans based on the individual's creditworthiness. Question 6. A lease is best known as A. A written agreement between the property owner and tenant outlining the conditions under which the tenant may possess the property. B. A written document between the property owner and tenant describing the length of time the tenant may occupy the property. C. An oral agreement between the property owner and tenant agreeing to allow the tenant to occupy the property for more than 1 year. D. None of these. Answer. A. In this case, the best answer for a lease is a written agreement between property owner and tenant outlining the conditions under which the tenant may possess the property. This would include length of time as well as payment due dates. Question 7. A unique mortgage that allows for the lender to make payments to the homeowner, allowing owners to convert equity into cash, that does not need to be repaid until the borrower vacates the property is best known as A. A reverse accrual mortgage. B. A reverse annuity mortgage. C. A reverse home equity conversion. D. An annuity payment conversion. Answer. B. A reverse annuity mortgage is also known as a home equity conversion mortgage, HECM. This type of mortgage allows for the homeowner to collect payments from the lender, converting the home equity into cash. This type of mortgage does not need to be repaid until the borrower no longer occupies the property. Question 8. If Jerry was asking to receive a loan in which the interest rate does not change during the term, he would be asking for this type of mortgage. A. A non-adjustable mortgage. B. A fixed-rate mortgage. C. A conventional fixed-rate mortgage. D. Any of these. Answer. B. A fixed-rate mortgage is a mortgage loan in which the interest rate does not change during the loan term. Question 9. If an occupant is legally expelled from real property, this is known as A. An ejection. B. An eviction. C. An evocation. D. An expulsion. Answer. B. An eviction is the lawful expulsion of an occupant from real property. This can be accomplished by the property owner through the court processes. Question 10. Real estate taxes, hazard insurance, and mortgage insurance are typically paid by A. Escrow disbursement. B. Personal property taxes. C. Real property taxes. D. None of these. Answer. A. Real estate taxes, hazard insurance, and mortgage insurance are typically paid by escrow disbursements.
Passing the real estate exam can be hard, like really hard. Statistically, only about 50% of people actually pass the real estate exam on their first try. Those people that pass, they go on to become real estate agents. And the people that didn't pass, they either give up completely or have to try again. Both of these options are painful, disappointing, and upsetting. Exam Scholar Real Estate Edition has been named as the best real estate exam prep by multiple publications for 7 years in a row. If you are about to take the real estate exam, Exam Scholar Real Estate Edition is a no-brainer choice. There is no other real estate exam preparation service out there that comes close. To enjoy the longest membership time, lowest cost, real estate videos, audios, articles, flashcards, vocabulary, exam tips and tricks, a 1-year no questions asked refund policy, and be one of the 35,000 people that it has helped pass the real estate exam, then sign up in less than 5 minutes at www.realestateexamscholar.com.
Question 1. A type of foreclosure proceeding used in some states that is handled as a civil lawsuit and conducted entirely under the auspices of a court is called A. Foreclosure review. B. Judicial foreclosure. C. Civil foreclosure. D. Bench foreclosure. Answer. B. A judicial foreclosure is a type of proceeding in some states that handles foreclosure as a civil lawsuit and is handled entirely by the courts. Question 2. This will cover repairs to certain items like air conditioning or heating during the coverage period. A. Homeowner's warranty. B. Homeowner's insurance. C. Homeowner's deductible. D. Homeowner's claim. Answer. A. A homeowner's warranty will cover repairs to certain items such as major appliances. This type of warranty is loosely regulated and is not required. Question 3. What is the main activity of the FHA? A. Insuring of residential mortgage loans made by private lenders. B. Making loans to individuals while insuring the loan amount. C. Issuing mortgage notes on behalf of lenders. D. Insuring lenders themselves and not loans. Answer. A. The main activity of the FHA is to insure residential mortgage loans made by private lenders. Question 4. One of the indexes used to determine interest rate changes for certain adjustable rate mortgages is called A. COFI. B. C. BAYAS. D. LAFI. Answer. A. The Cost of Funds Index, COFI, is one of the indexes used to determine interest rate changes for certain adjustable rate mortgages. Question 5. A type of multiple ownership where the residents of a multi-unit housing complex own shares in the cooperative corporation that owns the property and gives each resident the right to occupy a specific unit is called A. A union. B. A co-op. C. A group mortgage. D. A timeshare. Answer: B. A co-op or cooperative is a type of ownership that allows the residents the right to occupy a specific unit based on the owned shares in the cooperative corporation. Question 6. This type of building is operated like a commercial hotel even though each of the units are owned by the individuals. A. Cooperative building. B. Condominium hotel. C. Cooperative hotel. D. Association hotel. Answer: B. In a condominium hotel, the units are owned by each individual but it is operated like a commercial hotel. Question 7. This is used for determining interest rate changes on some adjustable rate mortgages. A. CODI. B. COFI. C. DOFI. D. CONI. Answer: A. A certificate of deposit index, CODI, is used for determining interest rate changes on some adjustable rate mortgages. Question 8. A public official who establishes the value of a property for taxation purposes is called an A. Assessor. B. Investigator. C. Appraiser. D. Collector. Answer: A. An assessor is a public official who establishes the value of a property for taxation purposes. Question 9. Items of value owned by an individual are called A. Assets. B. Real property. C. Interests. D. None of these. Answer: A. Items of value that are owned by an individual are called assets. Question 10. Assets quickly converted to cash are considered A. Liquid. B. Illegal. C. Solid. E. Unified. Answer: Assets that are quickly converted to cash are considered liquid assets. Question 1. A mortgage that can be assumed by the buyer when a home is sold is called an A. Assumable mortgage. B. Transferable mortgage. C. Passable mortgage. D. None of these. Answer: A mortgage that can be assumed by the buyer when a home is sold is called an assumable mortgage. Question 2. If a person is this, they can use a portion of a fund such as an individual retirement fund, but must pay taxes on funds that are withdrawn. A. Bonded. B. Vested. C. Trusted. D. Insured. Answer: B. A vested person can use a portion of a fund like an IRA, but must pay taxes on the funds that are withdrawn. Question 3. A fiduciary who holds or controls property for the benefit of another is called A. A beneficiary. B. A trustee. C. A grantor. D. A grantee. Answer: B. A trustee is a fiduciary who holds or controls property for the benefit of another. Question 4. A title search would show A. Clouds. B. Rivers. C. Faults. D. Hazards. Answer. A. A title search would show any clouds on the title such as liens or other items. Question 5. An organization that collects principal and interest payments from borrowers and manages borrowers' escrow accounts is called A. A lender. B. A servicer. C. A mortgager. D. A corporation. Answer. B. A servicer is an organization that handles the collection of interest payments and manages the borrower's escrow accounts. Question 6. Ownership does not pass to the survivors in the event of death in A. Tenancy in common. B. A fee simple estate. C. Tenancy in joint. D. None of these. Answer. In a tenancy in common, ownership does not pass to the survivors in the event of death. Question 7. When a lender uses another party to completely originate, process, underwrite, close, fund, or package the mortgages it plans to deliver to the secondary mortgage market, this is known as A. Third-party origination. B. Secondary origination. C. Partner origination. D. Outside origination. Answer. A. If a lender uses another party to either completely or partially originate, process, underwrite, close, fund, or package the mortgages it plans to deliver to the secondary mortgage market, this is called third-party origination. Question 8. What are the two categories of closing costs? A. Recurring and prepaid. B. Non-recurring and paid. C. Non-recurring and prepaid. D. None of these. Answer. C. Closing costs are divided into two categories, non-recurring and prepaid. Question 9. A technique in which a seller deeds property to a buyer for consideration, and the buyer simultaneously leases the property back to the seller is called A. Leaseback by. B. Sale leaseback. C. Lease to own. D. Sell leasehold. Answer. B. In this type of situation, this action between the buyer and the seller is called a sale-leaseback technique. Question 10. A provision in an agreement that requires the owner of a property to give another party the first opportunity to purchase or lease the property before he or she offers it for sale or lease to other parties is known as A. First right of refusal. B. First actionable right. C. Preemptive provision. D. Priority right of action. Answer. A. The first right of refusal provision in an agreement allows the party listed the first opportunity to purchase or lease a property before it is released to other parties. Question 1. During broker Shaw's preparation of the exclusive authorization and right to sell on seller Norman's property, Norman asked that a clause be included which would require the buyer to accept primary liability in connection with when the existing loan is transferred to the buyer. Shaw should enter which of the following in paragraph 2 of the exclusive authorization and right to sell? A. Buyer to take the property subject to the loan. B. Buyer to assume existing loan. C. Buyer to pay all cash. D. Buyer to make a large down payment to preclude possibility of a foreclosure. Answer. B. If a buyer assumes an existing loan, he accepts primary liability for that loan. Question 2. A third party who takes a promissory note that is complete and regular and has no knowledge of any defects is known as A. An endorser. B. A maker. C. A payee. D. Holder in due course. Answer. D. The party that accepts the endorsed note from the original payee without knowledge of any defects is known as the holder in due course. Question 3. The owner of a single-family residence plans to sell and wants to obtain an FHA appraisal to permit a sale with FHA financing. He should: A. Contact the nearest FHA office for an appraisal of this property. B. Have a lender apply for a firm commitment. C. Have a lender apply for a conditional commitment. D. Submit a recent appraisal of his home to FHA. Answer. C. The recommended process for the lender to contact FHA for a conditional commitment, that is, for advance assurance that an FHA loan will be made, establishing the loan value for the house. Question 4. A buyer defaults in making payments on a loan, therefore the lender's action probably would result in: A. Subordination. B. Escalation. C. Acceleration. D. Alienation. Answer. C. Acceleration indicates the right to declare the entire sum of a note to be due and payable immediately. Most trust deeds contain several acceleration clauses. Most common states, if you become delinquent in the payment on this note, the entire sum of the note becomes due and payable immediately. Other states, the entire sum of the note is due upon the sale or transfer of the property triggered by the sale of the property and therefore is a specific acceleration clause. The rule is, alienation clauses are types of acceleration clauses, but not all acceleration clauses are alienation clauses. Question 5. Which of the following is the classic definition of the boundaries of real property? A. A surface area indicated on a map. B. A reasonable use of airspace and extended to the center or the earth. C. A reasonable distance down and unlimited airspace. D. A practical or reasonable use of the earth and unlimited airspace. Answer. B. The surface of the earth and the material beneath the surface to the center of the earth is part of the real property. Since airways are now public domain, the ownership of airspace is used to an enjoyable and reasonable height. Question 6. A buyer defaults on a loan, therefore the lender would be able to cause the promissory note to become due and payable. This clause is: A. A subordination clause. B. An escalator clause. C. An acceleration clause. D. An alienation clause. Answer. C. Acceleration clauses are several different types and reasons. Question 7. In general, when the supply of a certain commodity increases: A. Price tends to rise. B. Price tends to drop. C. Demand for it tends to rise. D. Demand for it tends to drop. Answer. B. If demand is constant and supply increases, sellers compete with each other by lowering prices. Question 8. An offer to purchase real property was signed by a prospective buyer on October 2, 1977. The terms of the offer allowed 5 days for acceptance by the seller. Because of an illness in the seller's family, the seller did not accept the offer until October 10, 1977. Which of the following statements is correct? A. The buyer may demand the return of his deposit. B. The buyer must continue with the purchase because he did not withdraw his offer prior to acceptance. C. If the buyer does not complete the purchase, the seller is entitled to the deposit. D. If the buyer does not complete the purchase, the seller and the broker will each be entitled to 1/2 of the deposit. Answer. A. This constitutes only an offer, and one method of terminating an offer is the expiration of a specified or reasonable length of time for the acceptance to be communicated. Question 9. An offer by one of the parties to a real estate transaction to carry out that party's part of the contract is called a gratuity. B. Satisfaction. C. Recourse. D. Tender. Answer. D. Usually made at the conclusion of the transaction, the tender is the offer to perform on the terms agreed to. If the other party cannot perform, then the party that made the tender can rightfully claim the other party defaulted. Question 10. Should a person be discriminated against, what would best describe the actions available to them? A. Private action in a state or federal court. B. Civil action in state superior court. C. Criminal action in a state court. D. Criminal action in a federal court. Answer. A. As discrimination is not a criminal act, we would eliminate answers 3 and 4. 2 is incorrect as the remedy available to the injured party is not limited to only action through a state court. It could take place through the federal courts. Question 1. What is the function of the FHA in regards to loans? A. The FHA loans out money. B. The FHA loans out money and insures loans. C. The FHA insures loans. D. The FHA pre-qualifies potential applicants. Answer. C. The FHA insures loans but does not issue loans. Question 2. If Ronald owns a parcel of land that he has converted to a self-sustaining farm complete with a fence surrounding the property with no trespassing signs posted, he is able to enforce this notice by which right? A. Right of solitude. B. Right of ownership. C. Right to exclude. D. Right to dispose. Answer. C. Ronald has the right to exclude because it is one of the rights bundled into the legal rights of ownership. Question 3. A valid tenancy at will can be created between lessor and lessee in which situation? A. An oral agreement to lease for 2 years. B. An oral agreement to lease for 3 years. C. An oral agreement to lease for 6 months. D. An oral agreement to lease for 5 years. Answer. C. As long as the lease is for a time frame of 1 year or less, a valid tenancy at will can be created orally. Question 4. Seller financing in regards to a loan is also known as A. Legal. B. Purchase money mortgage. C. Balloon loan. D. Cash price negotiator. Answer. B. A purchase money mortgage is also called seller financing. Question 5. If Greta's potential home purchase lies within a flood zone and she wishes to receive any type of federal mortgage loan, she must also purchase A. An environmental hazards impact report. B. An environmental hazards blanket insurance plan. C. Flood insurance available from the federal government. D. A watershed insurance plan. Answer. C. Flood insurance must be carried if the property lies within a flood zone. This type of insurance is available from the federal government. Question 6. When Jenny and Max sign the document that includes the price and terms of the property of which they are ready to buy, they create A. An option. B. A purchase agreement. C. A purchase offer. D. A listing. Answer. C. Until a seller accepts their document that includes their terms and price, it is considered a purchase offer. Question 7. An oral agreement to lease a house for 2 years for a monthly lease rate of $1,250 comes under A. The legal rights of leasing. B. The statute of frauds. C. The articles of incorporation. D. The statute of lessors. Answer. B. Under the statute of frauds, any oral agreement to lease for a timeframe of more than 1 year is not enforceable. Question 8. An agent working under a broker is offered a new barbecue grill by a seller they are working with if the agent can produce a buyer by the end of the month. The agent does produce the buyer and the seller wants to give the agent the barbecue. What should the agent do? A. Accept the gift graciously and thank the seller. B. Inform the seller that it is not legal to receive such compensation from anyone except the broker. C. Offer to come pick it up at a later date. D. Decline the offer because of the health effects of burned meats. Answer. B. Only the principal broker may give out compensation. Compensation can come in the form of gifts, merchandise, vacations, money, etc. Question 9. The right to occupy a property for a specified period of time without outside interference is known as A. Squatting. B. Leasehold. C. Estate for years. D. Possessive acquirement. Answer. B. A tenant has the right to enjoy the subject property for the duration of the lease, leasehold. After the expiration of the leasehold, the rights revert to the owner. Question 10. A landlord is allowed to access the premises unannounced in which they own for A. Any reason. B. To make necessary repairs. C. In case of emergency. D. None of these. Answer. D. A tenant is allowed the right of quiet enjoyment of a property while under lease, and the landlord must give proper notice before accessing the premises.
Exam Scholar, Real Estate Edition.